Hello, investors and traders, and welcome to the Weekly Market Report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. If you had a chance to catch last week's report, you will have heard me say that there was a good chance we would rally up to the 20-period moving average, which is this blue line right here. And then I said we would start to pull back from that, being a resistance point. That's exactly what has happened. The other thing that has occurred with DIA is we now have the death cross that I spoke about. You can see the green line there being the 50-period moving average has now crossed below the 200-period moving average. So by definition, that is known as the death cross. That is the last of the major markets to have gone through that. You could see IWM has gone through that already here. QQQ has recently crossed below the 200, and of course SPY has done that as well. So what does that mean for the general markets moving forward? Well, as you can see here, this candle that closed yesterday on Thursday the 17th is known as a spinning top. Now the volume is still moving up as the price is moving lower, and you can see the oscillators are still going down. So I do believe that the diamonds are ultimately going to go down to test these lows. So I'm going to give it some time here because I think that could work its way right up until May before that happens, which isn't all that far off when you think about it. It's only less than 2 weeks. And so the downside target that I have for DIA is 368.12. Moving to IWM, I think we're going to see a little bit of a different pattern where this is very close to a bullish engulfing candle and the oscillators are going up. You see the difference? The oscillators are telling us which way the momentum is shifting. But that 20-period moving average, which is the blue line there, will most likely act as resistance. So I'm going to go up just a little bit higher, and then I'm going to come down, just like what we will most likely see in DIA. So I have a two-part target here, which, by the way, no one in the world is even going to offer this because it's just too many moving parts for anyone to really feel confident in doing that. However, we still have that 20-period moving average acting as resistance, like we saw back here. And ultimately, with this trade war still raging on, I think it's just going to come down to a showdown between the U.S. and China ultimately. And we'll talk more about that as we move forward into next week's trading week. All right, so again, upside target for IWM for the swing traders here. I'll give you those points. Upside target is going to be, let me get that box to come up, 189.47. Then I believe we're going to see a drop in volume. Once that happens, the oscillators are most likely going to start pivoting lower. And then the downside target being 175.81. Now, some people have asked me, how do you come up with targets like that to the penny? Well, it's not my number coming up. I draw the line based on what I see in previous down legs or up legs, and I go with the same duration. So in other words, you could see here this was a 5-day down leg, and I think that will most likely mimic the same angle and duration. So you see the data box showing 175.81. That's just what pops up when I drop the line there. And a lot of times, or most of the time, those targets are hitting right to the penny. Now, moving on to QQQ, which is basically the tech sector, you can see that the oscillators are kind of stuck in the middle here. I think we'll see again, just like what we saw in IWM, a move up to that moving average and then ultimately a bigger leg lower. So upside target on QQQ 452.61. Then again, we'll see the drop in volume, possibly a gap fill up here, which will completely reverse the price action from that gap fill point. And then you'll see the downside target of 417.67. Now looking at SPY, we are most likely going to see the same exact thing with a slight uptick here. moving average again being resistance and then ultimately coming to the lower levels. I think that there's going to also be a standoff between Jerome Powell and President Trump. You could already feel the tension there as the press continues to more or less pin Trump down to whether or not he's going to make a decision to remove Powell. I don't think he could do that so easily without court approval. We'll have to see where that goes. But remember, investors and the general market do not like uncertainty. And I think we have a lot of that coming down the road with the trade war and the geopolitical tensions around the world. So that's only going to add to the downside pressure. That's based on my opinion found here in the technical charts. Because if you look at the weekly candles here going back 10 years, this is most definitely moving into a bear market here. Now, ultimately, we might see a little bit of a bounce like we did here in 2022 with that moving average again being resistance and then the secondary sell-off that follows the pullback from that moving average. And that's a 10-year weekly chart, so that's a 10-week moving average, which is very close to it being a 50-day moving average right there. So I think we could see ultimately after we test this low a little bit of a pop, and then I think we're going to continue to zigzag our way down. As I mentioned in the past, I think this whole section right here is going to duplicate, and that's money in the bank. And I'm going to get to that in a little bit as I discuss some very profitable strategies that we put in place this week, and I'll show you what that looks like. So if you have an interest in learning that, you could come to Sticky Trades and plug into our Sticky Trade University and learn about options. So finally, let's go to the VIX. And the VIX is, again, caught between two gaps. I think I mentioned that last week, where the downside gap could absolutely fill. Now, remember, the VIX is, for the most part, inversely related to the S&P. So here's your downside gap, and there's still an upside gap. So the VIX is going to continue to oscillate in this area, which again makes this a perfect condition for swing traders, particularly option traders. So I'll polish this up. I'll find the high there and match it exactly to the pennies so you'll know when those gaps are filled. And a lot of times once the gaps fill, the prices do reverse. So more or less the VIX is stuck in a trading range right now at the higher levels. So that more or less magnifies what I'm talking about with regard to the tensions and concerns and maybe even some of the fears that are creeping into the market. Now, I want to analyze Bitcoin because a couple of people in the comments field have asked for Bitcoin. So let me put that in there, ticker symbol BTC. I have a downside target already in place, short term for Bitcoin at 81,180. And you could see that there's some long shadows up here, which most likely indicates that the selling pressure is continuing at these levels here. So if you're long Bitcoin, I would most definitely look to protect any profits. Now, I do have a much longer term downside target on Bitcoin that I do believe will hit at 63,140. So keep an eye on that, because all of the past targets, with the exception of that one that I've placed on Bitcoin, all of them have hit. Bitcoin does a great job following the technical signals, and you could also use Bitcoin as a benchmark to trade other Bitcoin-related stocks like Mara, Coinbase, Riot, other stocks like that trade very much in line with the technical signals. Now, I also want to mention silver. I had a short-term downside target for our members right here at $29.20. That has hit. But I also believe that the downside gap on SLV could very well fill at 28.42, at which time I will be a pretty big buyer at that level. I'll be putting that out on my X page. So if you follow me on X, you'll get notified when I'm a buyer. I always let the public know when I'm a buyer, and I give the general audience a chance to get in before I do. I give a 5-minute lead time. I never trade ahead of the crowd. I don't want to use any kind of influence that I might have, even if it's a small audience. I don't want to hurt anyone by putting in the buy order before I tell everyone. I'm not using the audience, so to speak, to make money. I want you to be making money off of the charts. So I hope you appreciate that, because, again, it's something that very few analysts will be doing. They usually put the position on, then they go all over CNBC and tell everyone how great the stock is. And then what happens? The crowd pushes it up, and by the end of the show, they're already out of the position with a big profit. Again, I don't play those games. We at Sticky Trades follow a very high ethical standard, and we pride ourselves on the fact that we're going out there, we're educating people on how to trade, and we get all kinds of emails and comments from people that tell us that this is literally changing their financial lives for the better. Each and every time you watch these videos on YouTube, I try to give you that little educational nugget so that you could learn how to trade and be comfortable doing so. Now, I'm going to mention what happened on Tuesday. We have a VIP group that pays quite a bit of money to follow the trades that we put out through our publications. And the money is already made here, so I'm not giving any secrets away to the VIPs. I'm just giving this out as an example of what we did on Tuesday. So April 15th, which was Tuesday, we were looking at the charts, and I came up with Microsoft. I saw that that was showing some bearish signals. Amazon was showing some bearish signals. JP Morgan was showing some bearish signals. UNH, which is United Health, was showing extreme overbought conditions and bearish signals. So what we did here is we sold credit call spreads that were in the money. These are all in the money call spreads. Now, I could take a whole hour talking about this, which I won't, because it'll take up too much time on YouTube here. But we do talk about these in our educational videos for our members. So remember, we have a 15-day free trial membership with no strings attached. So if you want to come on board and do a big data dump and learn as much as you can in that 2 weeks, then by all means, come on over. And so the only bullish position that we had was in Wells Fargo, where we sold a credit put spread. Now, just to keep this in the back of your mind, when you sell a call or you sell a call spread, you collect credits, and that is bearish when you do that. When you sell a put or a put spread, you also collect a credit, and that is bullish. So when the stock goes up in the one that you sold the put spreads get cheaper, and you get to buy those back at a cheaper rate. Again, I'm listening to myself here. I don't want to get too complicated. But the big deal was UNH. We sold an in-the-money call spread on Tuesday for $6.70. It was a $10 wide call spread. The most you could lose on a spread like that is the difference between the strike prices, which is 10, minus what you collect. So the most you have at risk here is $3.30. So if you want to learn how to trade options, that one option spread would only cost you $330 to put up in margin. You see, so there's something for everyone in the world of options. You just got to be willing to take the time to learn that. Now, yesterday, Thursday, the 17th, I put word out to our members, letting them know that that spread was now trading 97 cents. You see that? So what happened is you sell it for $6.70, you buy it back for 97 cents. You take that, divide it by your $3.30 margin requirement, which is your investment, and what happens? Wound up with 173% return. Now, we also sold an out-of-the-money call spread that will most likely expire worthless. So it wound up being, the credit that we took in here plus the credit here. And this one stock paid off all of the risk in every one of the other positions. So this is what we do here at Sticky Trades. We show people how to do this. Now, if I look at UNH, I'll show you what that looked like on the day we put this one out. Okay, you have to understand, right here is the 15th. See that red candle? That's when the call spreads were sold. And now you have to understand, I had no idea that was going to happen, that they was going to have a catastrophic gap down in the stock. I was expecting a possible pullback to the moving average, and then you go out there, get a nice 40 or 50% return on your investment. But the charts were telling us that the bearish conditions were surfacing. You could see this was a hanging man right there on that day. You see that? A hanging man is bearish 80% of the time. And that's what showed up the day before we put that trade on. Then what happened? Another red candle, and the oscillators started turning down. You see that? The big deal was in the CCI down below, where on Tuesday it crossed with the sell signal. The cross occurs when the CCI, which is the blue line, crosses below that red line. That's when the sell signal is generated. So what do? We go out there, put on the credit call spreads, and buckle up and take the ride. And that worked out to be absolutely perfect. Now, interestingly enough, every Wednesday I put out a rapid fire stock analysis session for 1 hour. And I had open target on UNH right down there that was still unfilled. What happened? Boom. Thursday gaps down, hits that target, allows us to close those positions for big profits, and we ended the week on a high note. Now, keep in mind, this is not a guarantee of returns or anything like that. I'm just using this as an example of how you could use the option markets to make money. And that's as simple as it gets. Now, I want to thank each and every one of you again for following us and liking and doing all that great stuff. Today, Good Friday, is a very special day for Christians around the world. If you're not familiar with this holiday, it is the day that Jesus died on the cross for us so that we can have eternal life in heaven. He basically took on the sins of the world for us so that we could live forever. And I pray that each and every one of you come to know that truth. If you're out there feeling stressed by the market, I ask you to do this. Just pray to God that He shows you the truth. He's not going to let you down, folks. Again, very few analysts are going to mix that in with their market analysis, but I feel it's very important that I do that, especially on this day. So have a great weekend, and I'll talk to you next time. So long.